This is Paul Donovan from UBS's Global Economics Department. Over in the States, there is some disquiet about giving Comrade Paulson $700 billion and telling him to do what he wishes with it. Congressman Frank was suggesting the proposals could take until next week to pass into law, though there will be a flurry of activity today, with Comrades Bernanke and Paulson testifying to Congress on the need to socialize the problems of the financial sector. The testimony and reaction of Congress to the testimony is going to be important to markets' reactions today. The longer it drags on, the more expensive the final bill is likely to be, as Japan's crisis demonstrates only too well. Delaying passage is not a good idea, and it will add a risk premium to the financial markets. Nevertheless, the fact that Japan's crisis has happened and has eventually been resolved has left its financial sector better off to seek opportunities from the distress of others. Morgan Stanley has just sold 20% of itself to Mitsubishi UFJ. It's quite like old times, with Japanese investors acquiring landmark US assets. Less cheerfully, WAMU has been subjected to the less than tender attentions of the credit rating agency Moody's, who downgraded their covered bonds, financial strength rating, and preferred stock, the last to the most speculative of grades. The foresight and ready grasp of financial fundamentals that the credit rating agencies possess is readily understood by financial markets, so this is unlikely to create a significant surprise. In the United Kingdom, house prices have continued to drift lower. The Rightmove index came in at 3.8% on the year. It's actually a little better than the previous month. More cheerfully for homeowners, the Bank of England's Deputy Governor, Gieve, was sounding nice and dovish. He said that inflation pressures were encouraging, i.e. they were easing, and warned that the bank should not overlook the deflation consequences of the current financial situation. Every major advanced economy banking crisis of modern times has been disinflationary or deflationary, so these are sound words. Hopefully, they'll induce an earlier rate cut. The European Central Bank has fearlessly entered the phrase comment on what it is supposed to be doing. Council member Stark has said that, quote, central bank action cannot contribute to a solution to the problems by lowering rates. One must hope that so blatantly false and inaccurate a statement is a misquote. It would be truly terrifying to contemplate the possibility that a central banker was capable of thinking such a thing and still to be allowed a say in policy. Lowering rates transfers income to borrowers, and that allows borrowers to repair their balance sheets. Repair of borrower balance sheets is at least half of the solution to the current crisis. Rate cuts are essential, and that means the European Central Bank as well as other major central banks. That's all for today. Have a good day.